Thank you, Madam Chair. Mr. Minister, dear Peter, ladies and gentlemen, Madam Chair, I'm extremely pleased to wrap up your proceedings of this morning session before you pick up on other topics and be involved in this 11th conference of the French insurers. I was able to speak to you under the auspices, the chairmanship of Mr. Mark Spitz. I'm very happy to do so again with your new chairwoman, Florence Guzman, to whom I wish full success. And even though I should not be meddling in the elections of this, I can tell you that your choice was excellent. First of all, because Florence comes from the city of Évreux, a city which is dear to my heart. She's part of my constituents. And above all, because she's an excellent specialist of this sector, which is more important than coming from the city. So I wanted to step in this morning, since you are an essential industry in the economic life of the country. I've said this again and again. The finance was essential for our economy, whether it involves insurers or bankers, and because similarly to the banking sector, you're facing challenges which are awesome and unprecedented. The economic context is radically new, with interest rates that are low or even in negative territory. Inflation is subdued, and growth is not sufficient enough. And this is something we discussed with the Luxembourg finance minister on and on as part of the meeting we have with other finance ministers in the euro. We all need to draw the consequences of this totally new situation, because it's there to last. Based on all the indications we have today, all the discussions I have here and there with economists, with insurers such as you, with bankers, or with central bankers. I was in Washington, for example, just about 10 days ago with J. Powell, and I spoke about this at length. I did the same with Mr. Draghi. Everything indicates that interest rates will remain sustainably low. This is not related only to low inflation or to low growth. It's related as well to more structural issues, the issue of productivity, which is mentioned again and again. Productivity, which now is low in industrial countries. It's related also to demographic growth patterns, which are very low in developed countries. And all these structural problems are such that we can foresee that such a decline in interest rates is there to stay for quite a long time. The same goes with the low growth, and I advocate that we supplement this with a more active budgetary instrument, because the monetary policy today is at the end of its breath, and the budgetary policy has to take over to give prosperity and growth and jobs to our citizens. And all of this is an economic situation which is unheard of for politicians and for your business and your industry. For the financial sector, this new situation deteriorates the yield or the returns and the assets of your balance sheet in a world where states issue negative bonds. Now, not only are there zero returns on bonds, but they may even start to cost something, and bond investments represent most of your investments. In parallel, the decline in rates involves a decline of discount rates, which mechanically increases the weight of your long-term obligations. This is a jaw effect, quite dangerous, in which there's a decline in assets, a rise in liabilities, which is creating a jaw between the solvency and the rest of your investments. Be sure that we are quite aware of the situation, and this is a topic which we are closely tracking, whether at the level of the public finances or the supervisory board, in order to draw all the necessary consequences. Despite this fact, I would like to remind those who don't want to see only a bleak picture, is that the insurance sector remains strategic in our country. we must pay great attention to it, and is behaving quite nicely. It's still a solid activity in France. You represent on your own 2,800 billion in savings, which is an awesome amount, and it is strategic in order to finance our country. Dealing with the insurance sector, well, you provide covers on the prudential ratios. It's not only to please you. Well, I'm happy to make you happy, granted, but it's above all want to guarantee the right funding of the French economy, and it's about guaranteeing the protection of French savers. So defending insurers is defending the general interest of the country by guaranteeing a good financing of our economy and also of the profitability of savings. In addition, despite the lower interest rates that I've just indicated, you continue to come up with about 15 billion euros profits annually. You still have good regulatory ratio with solvency coverage exceeding much more the minimum of 100% that is required. So I had the impression that it's not that it is a distressed sector. It's not the case at all. We've made great efforts in order to renew this sector, which remains solid, strategic for the country. However, it involves a transformation that we must carry out collectively. And it is such conference that I would like now to address this morning. It seems to me an unavoidable and irreversible transformation. That is the transformation of the life insurance. Look, we talk about those things that are decisive for those who save money, and it's also decisive to finance our economy. It's important to do things step by step. I do not believe in rushing headlong into this. I think would be counterproductive. I've discarded a number of proposals that had been made when we had prepared the PACT Act. It seemed to me to be too blunt. The same thing with life insurance. It has to change. It's irreversible. Having said that, but we should do this gradually, because any hasty decision in this field, in my view, would be counterproductive. The first transformation to bring along is to transform the life insurance Eurofund. That Eurofund is your leading flagship for more than out of 1,700 billion, it's 1,400 billion. The key to success is three simple pillars: saving totally guaranteed, and French are very attached to guaranteeing their savings. I've discarded anything that would challenge that. And my role as a finance minister is to protect savers, French people. I wanted to discard a solution after discussing it with you, with your chair and a number of insurers. I dispelled any solution that would challenge the guarantee or the cover of a savings. Now, liquid savings, cash is available all the time, and returns with attractive taxes for life insurance contracts. This created the success of the Euro fund in the life insurance sector. So I consider that the Eurofund remains relevant. French insurers can continue to offer in coming years positive returns in France thanks to the high level of investments in the past. French know that it is a safe instrument. It should really keep an important role in the savings of French people. I don't believe in radical speeches, which is about talking about the end or the disappearance of that Eurofund. It will still be part of the savings of French people who need predictability and stability. Having said that, the decline in the yield is certain. And claiming the opposite would be lying, because we don't have the possibility of bringing up interest rates higher. Central banks decide. It's a European Central Bank that decides, and I don't have the feeling that this would be part of Christine Lagarde's roadmap in the coming years. And we cannot tell savers, look, don't worry, rates will go up again and your returns will increase in coming years. Don't be worried about it. You would be lying to them. It's never a good thing. You never did it, and I will never do it. So we can have the safe, guaranteed, solid investment whilst taking into account of the fact that the decline of the yield is absolutely inevitable. The success of life insurance, in my view, uh, was there because it was based on this enlightened and educated discussion, and it would not be sustainable otherwise. It's up to us now to make sure that we can redirect the savings of French people in a different way, in a gradual way, taking into account the expectations here and there of those who want first stability versus those who would like to obtain more return, and even if they take a higher risk for this. With the PACT Act or law, we offer this possibility to diversify investments, and whilst keeping that Euro fund, it's now time that each stakeholder in the financial sector uses the possibilities of the PACT Act to diversify the investments of the French. It's their interest in terms of yield and return, and in terms of financing, it's good for our economy. This is the time for us to change, to bring about these transformations gradually, but serving more return on the one hand to the French who want to run into more risk, and also better finance our economy, which for too long finance itself in a different way. In the pact, we have diversified these available mechanism to offer a supplementary alternative to the fund. As you know, the PACT Act has enhanced the unit-linked accounts in the life insurance arena. The net inflows exceeded 20 billion euros in 2018. It is therefore very dynamic. 350 billion in investments with unit-linked accounts, therefore, are growing and allow to offer savers satisfactory range of investments. You have unit-linked accounts in listed shares, others in the real estate, others in different sectors, and the PACT Act will allow from now on to offer unit-linked account instruments invested in non-listed companies. Therefore, with these new instruments should be able to finance all the French economy and not only listed companies. Very tangibly now, savings of the French through these new instruments will be able to contribute to the growth of our SME, SMI fabric, and not only of large corporations. This is an excellent piece of news, which means that return for savings, better financing of our economies, these are the two pillars that have been set for these new investments. The PACT Act will impose that unit responsible and green and solidarity-based unit-linked accounts be made available as quickly as possible to policyholders. I am very eager to carry this out, as I said again and again this morning, when the finance will be green or will not exist. It is in your interest to offer this unit-linked accounts because these are the expectations coming from savers. The younger these savers, the more they'll have guarantees that the money they invest not only gives them some returns, but what is new, that it is useful for the general interest. In other words, that it is useful to fight against global warming and to supporting energy transition. So I really spur you to massively get involved yourself towards green investment. It is in your interest and in our collective interest. Now, the second direction of the PACT Act, we want to give a new impetus to the Euro Growth Fund. Well, you might say, hey, other systems have tried this before and had a hard time. Look, I think this time it's a ripe moment and we'll succeed. We'll make it because we've taken into account previous failures about the complexity of the procedure and other roadblocks that prevented this Euro Growth Fund to grow whilst it could display quite dynamic returns. The Euro Growth Fund concept remains an excellent one. Guarantee better yield, which allows to reconcile safety for the expiry chosen by the saver and a more dynamic investment before that expiry date. This option seems very interesting for all those who, over a bit of a longer term, who want at the end of this term, in exchange of the time that they give to their savings, they want a more substantial return. So this is one of the prerequisites of the success of that Euro Growth Fund. And as I said, we have to draw the consequences of this in terms of flexibility, readability for the policyholders. Unlike what we have now, the policyholders will be able to know anytime the return or yield of the Euro Growth Fund. It is a dramatic change which gives visibility to savers. They know what will be the return or yield in the fund they invest their savings. Such guarantee of transparency about the return will be what guarantees the success. This is something that we corrected to take into account the fact that in the past it did not work, but we believe, since we believe that the product is excellent, we want it to work this time. They'll be able, and that's the second major change, choose freely the term of the guarantee and therefore adjust the expiry date to their own personal projects. I believe in the freedom of individuals, of citizens. Citizens were much better in making their choices than us. We were not here to dictate choices to citizens, saying this is mandatory, this should be compulsory. No, the return will be open, transparent, and you choose the term. I think this is a key factor of for guaranteeing the Euro Growth Fund, to let the possibility to savers to choose the term of the guarantee and adapt this to the expiry date of their personal projects. If you want to finance the studies of your children, if you just have your children, you should go for the long term. If you have a savings plan, if you want to finance the studies of my children in the next 15 or 20 years, you would choose a very long period of time. If conversely, you want to finance the revamping of your home, then you should opt for something shorter so you can adjust your savings project to your personal projects. In addition, savings being more secured at any time depending on the term chosen, savings will be invested more dynamically, the return will be more significant, and the invested amount will be guaranteed for the expiry date. That's really the line in the sand. The guarantee of that capital at the term chosen is an absolute pillar, in my view, of life insurance products. And I know that some people wanted us to call this into question. I remain firm with my convictions. I think it is fundamental error not to guarantee the capital based on the expiry date chosen by the policyholder, even for something riskier, because you would be challenging the contract of trust between savers and insurers.
Last point of importance I would mention is that the PAC law has diversified the savings products outside of the scope of life insurance. And this is a major goal for this reform, which is the reform of the savings products, which is dear to me. You know what the landscape of the savings product was before the introduction of the PAC law. Basically, this was it was a maze, confusing, fragmented products, very complex rules, all different. You had the PERCO, Madeline, Article 83, lots of different product attributes and components, but basically you had 200 billion euros in assets to be compared with the 1.7 trillion euros in life insurance. So it was important to streamline, standardize the savings products with similar rules for all. On the 1st of October last, I launched the new PER savings product, simpler, more flexible, more beneficial. It is in your best interest that this type of savings product develop and become mainstream, as it will energize the savings product for the French population at large, stimulating the economy, giving us growth and expansion. These products are much simpler. The rules are the same for everyone. So what is guaranteed is guaranteed rules across all products, across all savings products. You don't want to have different rules depending and principles applying to savings products depending on your job, your age. So here, exit, tax treatment, transfer conditions, everything has been standardized. And then it will be flexible. The savings product is portable to another product. If you change your job, you will keep the same savings product. You don't need to change the terms. You don't need to engage in red tape or bureaucracy, and it's extremely important because you want to be consistent in the messages we send out to the French citizens. You can't tell the French you will have 4 or 5 different phases in your working lives because you'll need to adapt to a new job, but every time you'll change jobs, you'll have to change your savings product with different rules. No, we don't want that. You want to ensure portability of rights. You want to ensure security of the savings product and simplicity. It has had lots of people work hard, the Treasury, the Finance Ministry, and lots of specialists, but this is for the public general interest and to keep to make the lives of French people easier. And it's important that these products are portable across the working lives. Flexibility is the second factor. The savers will decide whether they exit with capital or with annuities in their supplementary top-up savings product. I know this was done in Luxembourg already. In France, you always want to improve people's lives in lieu of them, but people are wise enough to make their own decision. They don't want the public powers to try and protect them against themselves. I will protect you by making sure that you get annuities, but it is your savings, it is your investments, it is your choice to make it what you want to do. This is my belief. So we have lots of people criticizing this and saying that annuities should have been the option. No, you can choose. It is your investment. You can decide capital or you can decide annuities, the route you want to choose. Same thing with respect to release here. I'm talking about the voluntary compartment of the supplementary savings program. If the saver has some kind of a life event or wants to buy a second home or the primary home, the person needs to be capable of getting his money out. You don't want to explain to a 20 or 30-year-old to invest in a savings product, yet not be able to withdraw the money when he or she needs it. If you want to take some money out of your savings account because you need to buy your primary home, or your spouse has died, or whether you've had a major setback in life, you can't have that. And it was possible for some contracts and not for this one. No, we've standardized the rules. Everyone will be free to withdraw their own savings money as they see it fit. We also have tax incentives, and for these amounts, which are voluntary investments into these new savings products, will be deducted from the base of taxable income. This is a huge benefit which is given to the savers. All voluntary money invested into this new savings product will be deductible from the taxable income. Of course, there are limits to public generosity. I will reassure Pierre, who says, "Oh, here again, the French, the French officials are encouraging French people to spend and spend." No, there is a limit, but there is a tax incentive. So there is a clear objective to attract savers to this new savings product. I have set a clear target, as we need to head to very quantified targets and clear targets. We want to have quantified target. If we want to have a clear policy, my goal is to go from a bit more than 200 billion euros to some 300 billion euros in outstandings by the end of the 5-year presidential term. So we need to achieve this 300 billion euros in outstandings for this new product savings. These products, being the life insurance products and the savings products, are key in order for the French economy to be financed. When you look at the current economic situation, you can see that the financing of the economy has become a key national and European challenge. At the national level, I see too many SMEs who would like to raise tickets of 5, 10, 30 million euros. They can raise the initial rounds of money, but they can't raise the second tickets. And it's so I'm so sorry to see, so sad to see that those SMEs who thrive and want to raise 100 or 200,000 euros and have to turn to the US now. I have nothing against the American lenders, but it would be desirable that we have such lending schemes in Europe and in France. And on the 13th of September last, the insurance companies have committed to invest 5 billion euros into technology companies. I thank you for this initiative, and I suggest we meet at the end of this year to set the roadmap to define how this 5 billion euro investment will be channeled into the tech companies. This is the first step, but it's not enough. I think we need to aim at 20 billion euros in equity investments into the next generation companies. So we need to transit from 5 to 20 billion euros by combining public and private investments. And I would like to take advantage of Pierre Garamenias being with us to say this. This should be made a European level priority. One of the questions which is of concern to me is the issue of the digital technology. One of the reasons I've always asked myself is why Google, Amazon, Facebook were founded in the US and not in Europe. There's no reason why we shouldn't have had such similar companies being founded in Europe. No reason. There are, of course, a few regulatory reasons, but there's one and a single financial reason. That is, we have no capital market union in Europe. So when you want to develop and grow large projects, when you want to have big dreams, you want to have projects which will need to be funded by some dozens of billions of euros, and you need to have a capital union market. So with the German and Irish partners, we have received a recent report, and we need to build up this capital market union in the next 3 years. So this capital market union needs to be a union for sustainable saving and investment, so that the greater number understand what we want to make with this union. That is the new capabilities for savings and for investments, and investments being channeled into sustainable forms of manufacturing and production. So in order to successfully carry out this project, we need to smartly and cleverly review and revise the directive which is dearest to your heart, that is the Solvency II directive. And this is a key point to make financing of sustainable European economic projects sustainable. I want to take a broader picture here. Of course, I am paying high attention to what you as insurance companies do, but even behind you. So Solvency II is a question of course, governing the insurance companies, but it's a broader question of financing the economy. If we don't successfully finance the economy, then we will be at odds with the other giant economies, that of the US and that of China. So we need to successfully review and revise the Solvency II directive. We have to get prepared for this process, to get it prepared with you, with our European partners, and to stand very strong and make effective progress to the interest of the insurance company, but also to the interest of the financing the domestic and European economies. There are two priorities according to me. The first, and I won't dwell so much on it, it will enhance the supervisory framework for cross-border operations, knowing that the default of some insurance companies operating from outside of France but providing services have had a number of French companies become distressed in the building and construction industry. So we want to have a free provision of services operators to be more closely governed. This is an issue of security. It is also a question of fair and equal opportunity. And the second priority, even more strategic, will be to review and revise the rules with respect to the prudential principles of shareholdings in insurance companies. These are absurd rules and totally contradict our goals and objectives. We don't want to ask insurance companies to invest more in equities and in the financing of the economy while introducing over strict rules in the equity investments. Either you say the equities it's dangerous and you set very, very strict prudential rules and you will never develop the equities market for the insurance companies, or to the contrary, and this is what I believe in, we want the insurance companies to contribute more to financing the economy, and you develop an equity-based investment platforms with less stringent rules than is the case today. We've already obtained, with the support of the Netherlands, a measure to alleviate the prudential principles on long-term stock holding for insurance companies. I think we need to go much further. My objective is that this 20% shock more broadly applies to the holding of each share and stock which contributes to the funding of our economy. So I set a goal which is very ambitious to reduce the prudential terms and conditions applicable to the holding of stock, more specifically for the long-term stock holdings, but more largely a relief of a reduction of 20% of this prudential charge, which weighs on the insurance company and which impedes the development of the equity-based investment for the insurance companies. At the international level, France will keep promoting the same positions. Regulating the insurance industry will become a point of cooperation between the G20 summit meetings. We want to have an insurance, a capital standard, which will be pushed by a number of bodies. At the multilateral level, as you know, discussions are very complex between the European Union, with a very robust, standardized and harmonized framework, and other jurisdictions which only have fragmented regulations. So the purpose here is to get an international standard which is favorable to the European insurers. It's not difficult to understand that in multilateral discussions in the context of the G20 summit context, our role will be to defend our insurers, our bankers, our industrialists and our economic sectors, and not to keep our doors wide open to competitors which would not be subjected to the same prudential and regulatory rules and regulations. So we want to have a framework which ensures an equal playing field between all and across all jurisdictions. There's no question that we engage in unilateral dismantlement in this respect. So these are the few beliefs I wanted to share with you. Now, in a nutshell, the insurance industry is a strategic industry for the French economy, and I would say for ensuring the French social cohesion. You basically see a large portion of French savings and investment transit through your books. You are a contributor to French cohesion. We have a radically new economic situation which calls for change. Let us not panic. No panic. Let us keep our cool and have long-term vision. This is what we need. The life insurance products, the conventional ones, will not be done and over with overnight. That's not true. We don't want to cry out and say it's all a tragedy. Our role is to say this is the reality of things. Let us take a candid look on it and let us open new prospects. And this is what I'm sketching out to you today. Let us keep conventional funds with secured returns, which will be lower because the interest rates will remain lastingly very low. And let us work all together to provide new products which will help finance the economy and which will give more freedom to investors and savers and more profitability and returns to the savers. And I'm asking you to help us develop these products. And the work I'm doing on my side is to make sure they they are simplified to make sure they are tax reliefs which make them attractive, and to guarantee to you that I'll fight hard to make sure that the European prudential rules and regulations be adapted to these new product developments. We want the European prudential rules and regulation to help us successfully reconquer the financing of the French and European economy, which is indispensable for respective economies to make sure we keep playing a key role in the world next to China and the US. Thank you very much. Have a great afternoon.